Hello, everyone in social media land, and thank you for watching Tuesday's Tips with yours truly, Realtor Vicky Day. So, yesterday, a study came out that only 20% of Black Americans can afford to purchase a home in today's market. And that's because only 20% of Black families earn at least $100,000 a year. And 51% of the homes on the market right now are affordable with household incomes of at least $100,000. So I'm here today to discuss some ways that maybe some creative financing ways so maybe you can afford to purchase a home in today's trying market. Most working people have a 401k. You can pull from your 401k to purchase your primary residence with no penalty. I understand 401ks are set up for investments and for your retirement. However, if you already have a nice amount in your 401k, even if you're near retirement age and you wish to purchase a home and your regular savings just isn't enough at the moment, that may be an option. Or if you're working, or if you're about, I don't know, you have a lot of years left in the workforce. If you're maybe 30, 40 years old, you have like 20 years left in the workforce, um, you're going to replenish those funds. So it may make sense for you to pull from your 401k. Again, no penalty. There's also grants. PHFA, the Pennsylvania Housing Financing Agency, they have a grant called the K-FIT grant, and that will give you up to 5% towards your closing costs and your down payment, which is nice because in the past, most grants would not go towards your down payment. You would have to have your own down payment funds, and they would help you with the rest of your closing costs. But the K-FIT covers it all. Also, every county has their own home buying assistance programs. So if you don't fit the criteria for the K-FIT program and you're looking to move outside of Philadelphia, you may want to research the different counties, and even different boroughs and townships within the counties have their own home buying assistance programs to look into. Then there's a gift, and you can get a gift from either a parent or a spouse. I think there may be a limit on that though, so that's something to consult with your mortgage lender if you have someone, a parent or a spouse, that's willing to give you a few $1,000s towards your home purchase. Also, there are seasonal funds that you can get from anyone, and basically seasoned means it's been in your account for at least 2 months, or 61 days, as I like to say. Now, the other point is something I'm seeing a lot recently, which is multi-generational dwellings. So you have children and parents that are combining their assets, combining their funds to purchase a home that fits, their needs. And it works nice, especially if you have older parents, elderly parents, and they need home care, and you're able to provide them with that home care. It may make sense to combine their funds and your funds and get a home that fits your needs. As well as, I also see it with like the 30-year-olds and early 40s. They are also combining their income with their parents and purchasing a multi-generational dwelling, which is nice. And maybe those parents may not need someone to take care of them at the moment, but in the future they will, and they're already set up for that situation. Now, cryptocurrency, that's a tricky one, but it's possible. So it's being used more in Europe than it is here in the United States, because it's hard to find a lender that'll touch it. it's too tricky for them, and it's just basically because of the cryptocurrency. There's really no way to trace it. The paper trail is slim, and banks, they live on the paper trail. However, if you have a nice amount in your Bitcoin or your cryptocurrency, and you want to cash it out and purchase the home with cash, that's the easier way to go, than trying to just pull out some funds just to handle your down payment and closing costs. Because then you still need to get a mortgage, and like I said, it's hard to find a mortgage lender that will deal with cryptocurrency at this moment. Even though I have heard reports say that they see in the next like 2 years that's going to be pretty prevalent. So now those are ways, some creative financing ways to purchase a home to actually live in. Now for investors, you have your 1031 exchange and hard money loans. With the 1031 exchange, basically what you're doing is selling one investment to purchase another. And I believe you have like 45 days from the time you sell the investment to purchase the replacement investment property. And it's tax, you defer the taxes. So that's where that comes in at. Because usually if you sell an investment property, there's nice taxes that go along with that. But when you do a 1031 exchange, the taxes are deferred. And then you have the hard money loans for investors as well. And with the hard money loans, the terms is a short loan, and it's a private loan. So there are groups. So you would, I don't know, do some research, go online. So there are some groups that will give you money to purchase a home, to fix the home up, whatever you need. The interest rates are usually very high. I think I heard like maybe 20%. And the terms are as little as 6 months to maybe like 2 years. I don't think I've heard of any hard money loans that were longer than like 3 years. That's pretty much it. You may find some that go a little longer, but they're short-term loans. With, again, high interest rates. All right, so if you want to discuss any of the creative financing ways to be able to purchase a home in today's trying market, give me a call so we can discuss your specific needs. Thanks again for watching, and I will see you next Tuesday.